Malayan Flour Mills is positioning itself for its next phase of growth following a cash call, but results have not been good. We talked to CFO Cheang about overcoming hurdles, turnaround, and progressive solutions for an old-school business. The main thing recently is the big rights issue. Subscription period's closed already. How was the response like throughout the whole exercise?
The response has been good, though on the first day I think there is a bit of confusion from the market, from the investor, as in exactly what it is. On the first day of trading of the OR and LR, the price actually suffered a hit because the investor didn't understand. And what happened is that after the first day, personally I received some calls from some of the investors, asking exactly what is it, because I think some of the investors actually were confused on what we are trying to do. I think a lot of investors overlook one fact, and that's a big factor. And that factor is the fact that buying the OR, right, even though the share price back then was probably about 40-ish cent, I think 47 cent, 48 cent.
Yes.
There was still value in that simply because when the investor subscribe to the right OR cows, they will be entitled to bonus and warrant.
Because shareholders in general don't like cash call. They're very sort of skittish about it. So when your investors came to you and they came asking about why you kind of did this, how did you explain, how did you justify it to them?
The rationale to actually do this cash call is really to actually fund our expansion, but the expansion already started. It's not the case where we are waiting for the fund to come in, then only we expand. In fact, what we indicated through the exercise that we are going to use the proceeds to actually fund three things: the processing plant, the poultry processing plant, the aquafeed mill, and the jetty. The aquafeed mill is already up and under commissioning. In about 2 months' time, that's going to be operational. So it's not a case where we get the fund in, then start building, then only the shareholder will reap the benefit 18 months down the road. It's immediate.
After what seemed like a couple of really good quarters, your latest third quarter, it wasn't great. You swung into a loss, and not only that, it was quite a steep drop because the quarter before that, the year, was like 23 million in net profit. And is this all because of your poultry division? Poultry
division is one part of the challenge. The other part of the challenge is actually really because of our Indonesia JV. More particularly, it's because of the Indonesian rupiah has actually substantially depreciated in 2018, particularly in Q3. Just for context, in September, if I remember correctly, the Indonesian rupiah actually went down to about 15,400 to a US dollar. And if you look at the historical data, that rate is actually the lowest in the last 20 years, even worse than the 98 crisis. So that was what hit the Indonesia business. And the Indonesia business is really a flour business. Flour industry is very competitive, and most of our costs are actually in US dollar. 80-85% of the costs are actually for the purchase of wheat, which is actually in US dollar.
Yes.
When the Indonesian rupiah suffer, so the cost immediately shot up. For the poultry, the challenge is really, I would say the challenge we had in 2018 was really the first 9 months. The first half of the year was because of reason that I've already explained to the press a couple of months ago about disease. It is really a supply constraint that we had. It's not so much of demand. We have to turn away customer and say sorry to our customer simply because we couldn't produce fast enough.
So how do you then intend to kind of overcome this?
Well, first talk about Indonesia, right? Indonesia, if we look at the rupiah exchange to US dollar, it's actually strengthened. Right now, it's probably just about 14,000-ish to a US dollar. So pressure on the cost has come down. And the second data point in Indonesia is that we are seeing opportunity or room for us to actually increase prices.
Oh, that's good.
It's a slightly delayed.
So there is some room to increase.
Yes. So Indonesia, we're actually starting to see things turn around. In fact, we are starting to see a good turnaround in Indonesia. And the Indonesia story is actually very strong for us, simply because we are running at 100% capacity or close to 100% capacity the flour mill. We are actually expanding our silo capacity, adding additional lines as well. So that's going to give us a very good opportunity to get into the next phase of the growth in Indonesia together with our joint venture partner. For Malaysia, it is really the poultry business. The price actually has gone up in Q4. We are still finalizing the number, so I will not have anything to share at this point in time. But what we are seeing is that the chicken price has actually started coming up. Mid of Q3, our production of the chicken has improved, so things are looking good.
Your segment that you guys serve in is very competitive. It is very competitive. It is sensitive to sort of like consumer fluctuations and everything. So how do you intend to kind of combat this when prices go up or consumer sentiment is soft and all this? I mean, like, how do you ensure that you still keep paying dividends, which is what you promised your rights issuers, right?
What we are doing is that, and which is why we are actually investing in our state-of-the-art processing plant in Lumut. Just for context, right now the existing poultry processing plant has a capacity of 80,000. It was built 30 years ago.
Okay.
Yeah, so we have actually maxed up capacity for quite a while already. One of the challenges why we suffer a hit in Q3 of 2018 is because we were still have a big segment of our business that go to the live bird market. Why do we need to channel the bird that we produce into the live bird market instead of processing plant? Because my processing capacity is limited. Right,
yes,
it's only 80,000 chicken a day that I can slaughter. So the investment is actually intend to triple our production capacity, right? So that is going to actually give us ability to actually go further downstream, to build further processed product, to get into more value-added product, which is going to have better margin for us.